Who is a director? A director is someone elected or appointed to manage a company's business and affairs. The definition also extends to those that act in the position of a director, commonly called a de facto director, who is someone that performs the tasks of a director but is not formally appointed as such. The definition also includes a shadow director, who is someone not officially appointed, but who the other directors are accustomed to following their instructions. What are the director's duties? In the ordinary course of business, a director has a primary objective to act in the interests of the company, and more specifically, its shareholders. A director is responsible for making decisions on behalf of the company, which ultimately must be in the best interests of its shareholders. However, in the event a company is insolvent or likely to become insolvent, a director's duties expand to its creditors of the company, including suppliers, employees, and statutory bodies such as the Australian Taxation Office. General duties of a director. Some general duties of a director include Section 180 of the Corporations Act. A director must exercise their powers and discharge their duties with a degree of care and diligence of a reasonable person. This includes properly informing themselves of the financial position of the company and making decisions in good faith and for a proper purpose. Section 181 of the Corporations Act. A director must exercise their powers and discharge their duties in good faith in the best interests of the company and for a proper purpose. Section 182 of the Corporations Act. A director must not improperly use their position to gain an advantage for themselves or someone else, or cause detriment to the corporation. Section 183 of the Corporations Act. A director must not improperly use information through their position to gain an advantage for themselves or someone else, or cause detriment to the corporation. Director's duties. Insolvent trading. In accordance with Section 588G of the Corporations Act, a director has a duty to prevent a company trading whilst it is insolvent. In other words, where a company is reasonably unlikely to pay a debt, i.e. an invoice to a supplier, a director must exercise his or her powers to ensure the company does not continue to trade and incur such a debt. If the debt is incurred and unable to be repaid, the director must be held personally liable. In circumstances where a company is insolvent, a director must take appropriate action such as appointing a voluntary administrator or liquidator. Director penalty notice. What actions should be taken by a director if I receive this notice? A director penalty notice, or DPN, is a formal notice issued by the Australian Taxation Office for unpaid debts. A DPN covers the following debts: pay-as-you-go (PAYG) withholding tax, superannuation guarantee charge liabilities, and goods and services tax. Liability for this debt was recently introduced in 2020. If a director receives a DPN, they will receive one of the following: non-lockdown DPN, which provides a director 21 days to deal with the outstanding debt. Options include the appointment of an administrator or small business restructuring practitioner or liquidator. Lockdown DPN, which holds the director personally liable for the debt. The only solution is the payment of the debt in full within 21 days from the date of the notice. We advise directors to communicate regularly with the ATO to ensure debts do not escalate and stress the importance of lodging all business activity statements, income tax returns, and superannuation guarantee charge statements prior to the due date. The ATO is more likely to work with companies which lodge on time irrespective of whether the company has the funds to pay its debts. Furthermore, by lodging on time, a director is afforded more options to avoid personal liability, such as appointing a voluntary administrator. Director's duties in an external administration. If a director decides to place a company into voluntary administration or appoint a liquidator, they have obligations to assist the external administrator. Such duties include advising the location of company property and advising who holds such property, The director must also assist where required in the delivery of assets to an external administrator, providing books and records and/or providing access to the books and records of a company. This includes, but is not limited to, providing access to any cloud-based accounting software such as Xero or MYOB, preparing and providing a report of the company's activities and property, commonly known as ROCAP. A director's powers are otherwise suspended in the event of appointing an external administrator. However, our team has dealt with several appointments where a director has placed their company into voluntary administration and put forward a deed of company agreement, DOCA, to deal with the debts of the company. This DOCA can then allow the director to regain control of their company. We have dealt with DOCAs in more depth in a separate notice on our website. The team at Cathro and Partners are happy to work with you or your client's circumstances on an obligation-free basis. Please contact us at 029189 1700 or at admin@cathropartners.com.au.